Hey there, traders! Welcome back to the channel. It's great to have you with us today. Now, if you've been keeping an eye on the trading world, you've probably heard the buzz about proprietary trading firms, better known as prop firms. But the question is, are these firms really the golden ticket to trading success? Or are they not as great as they seem? Well, in today's video, we're going to dive deep into the pros and cons of working with a prop firm. By the end, you'll have a clearer idea of whether joining a prop firm is the right path for you. So, let's not waste any time. Let's get into it. Pro number 1, access to capital. First up, access to capital is one of the biggest perks of joining a prop firm. One of the biggest hurdles that aspiring traders face is securing enough money to trade larger positions. Without substantial capital, your trading opportunities are limited, and scaling your strategy can be incredibly difficult. Prop firms solve this problem by giving you access to their funds, sometimes in large amounts, which means you can trade with significantly more capital than you could with your own savings. This increases your potential for higher returns. Of course, this comes with its own risks, which we'll get to in a minute, but the upside is huge if you're trying to scale your trading business. Pro number 2, risk mitigation. Next, let's talk about risk mitigation. One of the scariest things about trading with your own money is the emotional toll it can take. Losses can feel personal, and the fear of losing your hard-earned savings can lead to overcautious decisions or rash actions. But when you're trading with the prop firm's capital, that burden is significantly reduced. If you make a mistake or your trade doesn't go as planned, you're not losing your personal money. You're only risking the firm's funds. And on top of that, prop firms usually have stringent risk management systems in place, which means they actively work to protect both your trades and their own capital. This reduces the stress of trading and can allow you to focus on making smarter decisions. Pro number 3, mentorship and resources. Another huge benefit is the mentorship and resources that many prop firms offer. They don't just give you money and send you off to figure it out on your own. In fact, many firms provide comprehensive training programs and access to a community of experienced traders. They'll give you the tools, strategies, and real-time market analysis that can help you become a better trader. Some firms even offer one-on-one coaching, which is perfect if you're just starting out or want to refine your skills. This level of support is a major advantage, especially for those who feel like they need that extra push or guidance to succeed in the markets. Now, with every great opportunity, there are some trade-offs. So, let's talk about the cons, because, let's face it, not everything about prop firms is perfect. Con number 1, profit sharing. First on the downside is profit sharing. While you get access to all that sweet capital, remember that you don't get to keep all the profits. Depending on the firm, you could be looking at a profit split anywhere from 50-50 to 80-20ths, with the firm taking the larger share. This means that while you could potentially earn much more than you could with your own money, you're still handing over a significant chunk of those profits. If you're someone who values keeping every penny of your earnings, this can be a tough pill to swallow. However, the access to more capital and the resources can make up for this in the long run, if you're consistent and strategic with your trades. Con number 2, high pressure and expectations. Another potential drawback is the high pressure and expectations that come with working for a prop firm. These firms are looking for consistent profits, and they expect you to meet specific performance benchmarks. If you fall short, you could face penalties or, in the worst-case scenario, get kicked off the program. For some traders, the intense pressure to meet these expectations can be overwhelming, especially if you're new to the game. This kind of environment can lead to stress, burnout, or even reckless trading if you're not able to manage it properly. So, if you're someone who prefers to trade at their own pace and with less scrutiny, the prop firm environment may not be for you. Con number 3, limited control over your strategy. Finally, let's talk about the limited control over your strategy. While prop firms may provide you with a lot of resources, they can also impose restrictions on how and when you can trade. For example, some firms have strict guidelines regarding the kinds of trades you can make, the markets you can participate in, or the risk management strategies you can use. This can be frustrating if you're an experienced trader who likes to work independently or implement custom strategies. The firm might also limit your ability to trade on certain platforms or use certain instruments. So if you value freedom and flexibility in your approach to trading, you may find these rules constraining. So there you have it, the pros and cons of trading with a proprietary trading firm. As you can see, working with a prop firm offers access to capital, support, and a low-risk environment. But on the flip side, you're giving up a portion of your profits, dealing with high expectations, and possibly facing limitations on your strategies. Let me know what you think down in the comments. Are you interested in joining a prop firm? Or are you more of a solo trader? I'd love to hear your thoughts. And if you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you never miss an update from the channel. Thanks for watching, and as always, happy trading!